Hello, YouTube. There is blood in the street. So the question for today is whether or not this dip is for buying or if it's for selling. Simply put, we're back here too. Our bear market downtrend, and we got a bounce off of it. So yesterday we were getting a rejection. Today we're getting a bounce. Let's zoom back into that 1 hour chart and see exactly what happened. Well, we note that there is a push pull happening off of this area. So please make sure to drop me a comment and tell me what you think. Is this for buying or for selling? So do we buy this back test or do we fade it? That's going to be important because we are currently inside of fear. We were in extreme fear earlier, went up into fear, settling here at about 26. There's also some headlines for us to go through. Then we're going to look back at some charts in a moment. So Meta is cutting off. That is not a strong market, but the question is whether or not the Fed's delayed monetary policy is now going to be giving effects like people losing their jobs, which is what they wanted. Apple, the largest company, we talked about them yesterday. Apple delays bonuses for some and limits hiring in latest cost-cutting effort. There we go. Why does this all matter? Well, because we know that the Fed usually keeps hiking interest rates until something breaks. Well, we're getting some evidence things are breaking, even if not quite broken. And we got a Nikkei leak report yesterday. So this is saying that cooler pay gains add to debate on when Fed might pause rate hikes. When was this published? Yesterday. So this article from yesterday is that the Fed is already previewing the fact that maybe they're going to have to do a pause. Maybe they're going to do 25, maybe a pause. That's the current discussion. Double line Gunlock says regional bank crisis may port end problems down the riskier areas of credit, including high yield corporate bonds. Double Lines Gunlock says more plausible odds of recession in the next 4 to 6 months. We're going to dissect what he said in a moment. Double Lines Gunlock says triple C rated bank loans is another area to watch. So this is very, very important because today we also had core CPI coming in, and I don't think the market really focused on it because the bank failures is much more important than the inflation as of the second. But tomorrow, we're going to shift focus again back to American markets and American data with the PPI or producer price index coming in and core retail sales before we have the ECB coming in for the rest of the week. So what does this mean? It means that tomorrow we're going to be getting data in regards to America. And this data is going to tell us whether or not good data is good or bad data is good, or bad data is bad or bad data is bad. So this is so important because we now actually got our test here at the 200 weekly moving average as well. And what I'm going to do is actually go to a tweet that I shared out because I think tweeting's good when times are relevant. And this is the tweet that I put out today. So we were looking for a reject off the first candle low, and that's exactly what we got so far. So the question is whether or not we're going to continue to rally. And if we do, get back above 393, 394, that would invalidate this previous yellow box that we've been focusing on. Why is this important? Well, because that is not only our 200-day moving average, or the black line currently at 393.08. We had a high of the day of 393.45. Then we go here to our weekly chart, and we got the box highlighted, but we'll delete everything for a moment here to make it a little bit easier to see. And we note that all we got to do is basically get above 393.64. And that would start to invalidate this pattern here because that is where we rejected last time on the week of September 19th. So this was my template. I didn't know what the fallout was going to be going into Monday, but now that we have the price action starting, we can note that the pattern is really similar, double engulfing as we noted before. And there's one more chart I want to look at right now. It is the IAT. And this is the regional banks ETF. And this is one that I want to look at just because when we look at this chart, it shows us that whoa, right? That these are all the regional banks collectively together. And if we think about that quote that Jeff Gundlach just told us, he said that there might be more risk further down the risk spectrum. I would say that's things like real estate. Why? Real estate is extremely sensitive to interest rates. So if we have higher interest rates and housing is very sensitive to it, what could that mean? Well, for me, it can mean that some regional banks that are exposed either through REITs, real estate investment trusts, or directly by providing mortgage-backed securities, that's where I think the risk is going to come next. And that's the reason why we faded this whole move. So I'm not sure whether this dip is for buying or if it's for selling. I think I'm going to leave that up to the audience. And I'm just here to provide both sides of the story. This is interesting because as we look here at IAT, we are basically up by 63 cents on the day, or just under 2%. We faded most of the move. This looks very similar to what we saw on TLT yesterday, where we gap up, we sell off, And now the question is whether or not we're going to continue the TLT fade or if we're going to keep going higher. So I think that the bank sentiment is really important because if we see stabilization, I think, again, not I know, but I think that this could mean that we're going to shift gears back to the inflation fight. If there's not systemic risk, then we need to look back to the inflation fight. That's what I think is going to happen here. So just going sideways would probably be constructive. Every ETF is green. And I actually want to look here at the heat map to see what's been happening so far in the last 1 week. And I'm looking at the last 1 week just because I want to see what's actually standing out here. Let's go no group. All right, trillion-dollar companies are coming in and they are supporting us. That is Microsoft, Meta with the layoffs today. That's bullish. Amazon, Apple, not that bad. Google, not that bad. Everything else is pretty bad, which means risk off. And risk off means that people are just selling first, asking questions later, like we talked about yesterday. So now going back here to the next chart we want to look at, the 2-year note. Why? Dramatic reversal. So failed breakdown, which means that we got below the 200 DMA. We reclaimed it, and we're sitting here at 4.2. And we note the 10-year note is also up right back to its 50 DMA. And then additionally, we have the 2-year note here, which is making a huge move. So we saw the market absolutely pump into the close. And I think that's related to PPI tomorrow, where we're going to be looking for continuation bullish if that is truly where the market wants to take us. So just trying to keep this short and sweet today because I think that a short and simple story is probably the best one. But I'm going to ask you, please, and thank you too, smash a thumbs up and subscribe to the channel if you're enjoying the content. We're going to look at about 2 more charts, and then we're going to wrap it up because I think we did a great job of laying it out on the weekend, and we're going to leave you with that video at the end. So looking here to QQQ, what's interesting is that we actually faded all the way back down. Sorry, where did we close today? Today we closed at 297, which means we opened up right around yesterday's high. We pumped up, and then we faded back down, and then we bounced up. So here's the open. There's the rally. There's the fade. There's the bounce right off of yesterday's high of the day. So previous resistance turned into support, and that's usually pretty constructive. So the fact that it's turning into support here tells us that maybe there's more in the tank if the bulls want to advance us higher. Next thing I want to look at here is just going to be the dollar, because the dollar is sitting right around its 50 DMA. So it got over the 50, had to digest it, bounced higher, and ultimately came crash landing right back down on it. Is this going to turn into support, or is it going to be resistance where we're going to fall below it and then come back down closer to about 101? We're going to look at maybe a few more final charts here because Bitcoin has been moving. So it led the market to the upside. Is it now flashing a warning, maybe going to the downside? It's been an incredible move from our previous all-time high at about 19,800 all the way up here to about 25K. That is a massive, massive move. And then finally, I think the last one I want to look at here is going to be VIX. I want to look at the VIX just because what this is telling me, again, whether I'm reading it or not is a different story, but what it's telling me is that people got very scared. Oh my God, we need a lot of insurance. It climaxed into yesterday, which is why we have these upper wicks. And now people are like, okay, I bought the insurance. It doesn't look as bad as before. There's not systemic financial risk, which was always the concern going into here. So now that we see this starting to materialize, people are saying, you know what, maybe I don't need so much insurance. So one more time, what we're going to look at going into tomorrow is going to be the SPY, whether or not it can basically just get above today's high of the day, which will be tomorrow it'll be today's, sorry, I'm just confusing myself here. If we can form a daily higher high, that's what we're looking for. It means we're going to be closing back over the 200 DMA, and all this volume that's now been push-pulling is going to turn constructive. If you look here to QQQ, it's pretty much the same story. So we know we're going to have our downtrend to battle with tomorrow, which is going to be here at about 298. That's a very significant area for me. And right now, I can also note that we're right here back to our gap and flush here back to December 22nd, which was a high of 296.88. So we did close just over it today. And without complicating it too much more, I would love it if you could please drop me a comment and tell me what you think, because I do always enjoy the comments and we try to respond to as many as we can. So if you still want to watch more content, there should be a video queued up here on the left-hand side now, which should walk you through my weekend thoughts in terms of what would happen. And if not, I thank you for watching and I look forward to seeing you tomorrow.